Well, AU Small, Morgan Stanley has actually upped the target price on AU Small. What they've done is they've increased their target price from 925 to 1,000 rupees a share, which is a solid 40+% upside. What we are therefore seeing is trying to understand why Morgan Stanley has done what they've done. Well, the first piece, what they're suggesting is that there's going to be an earnings re-rating. Now, on the earnings re-rating, what they're suggesting is top line will be driven by two factors. One is the growth on the credit front is going to be extremely strong, and that will continue to be strong. That will aid top line. Point number two, the rate hiking cycle has now possibly peaked, and therefore margins should only get better from here for AU Small, which has a large fixed rated book. So that will possibly benefit AU Small as rates actually start to decline. So that's one piece. On the cost side, they believe that OPEX has already been factored, and now OPEX going forward, the cost to income ratio will actually start to come off, which will aid profitability for AU Small. Credit costs, on the other hand, have bottomed. So there is some scope of re-rating with regard, some normalizing of credit costs which will happen, which they are factoring in. But despite all of that, Morgan Stanley believes that 25% earnings compounding is expected from the likes of an AU Small. What are the other factors which are possibly going to aid AU Small? One is the merger with FinCare should obviously give them more geographies, more legs and growth, but it's also EPS accretive. So that should also aid the numbers. And with regard to risks, what they're suggesting is possible risk could come from execution on the deposit growth front, which could spill over onto the larger bank, and of course asset quality risks will persist. Anything on those fronts which could go wrong could possibly have an adverse impact. But overall, very bullish on AU Small Finance.